Moving forward from there, not a whole lot has really changed in the grand scheme of things. Let me pull the rest of these assets up here. We do have the NASDAQ's relatively flat. Small caps are actually up 0.75%. So this is one of those other things that tells us people are really bullish in the market. We've seen small caps really scream higher. They are highly leveraged play, growth stocks. They carry a lot more volatility, a lot more risk, definitely pushing deeper into resistance, up into all of this noise right through here. So it is getting deep into resistance. When people pile into small caps, that means they are taking a lot of risk. They want to make a bunch of money. And if we look at the hot list, we've got blockchain really starting to expand and push higher, which we talked about this a session or two ago. If blockchain starts to run, that could be the leading indicator that Bitcoin is about to run. And if we take a look at what Bitcoin did yesterday, it started to push higher. It started to break from this bull flag we've been talking about, and it's starting to look pretty bullish for an imminent breakout. Strong buying volume on that day, so on yesterday. So this is all a good sign. Now, we've been long with the band strategy, IBIT here for a while, and it's got quite a bit more upside potential still. Now, if we take a step down and take a look at the ARK ETFs, this is where I find, I hate to categorize people, but this is where the really aggressive traders, emotional traders are in. They want to make big money. They believe they should, the more they trade, the more money they're going to make. Now, we are way off the highs from where the last people really piled in. We're still down dramatically. Still need to more than pretty much double the value just to get back to break even. But overall, if we take a look at where money has been flowing, lots of people piling into the ARK ETFs and taking advantage of it. Now, still looks bullish. There is a series of, this is a nice bull flag. It's turning up, and we can see the on-balance volume, this blue line. So there's a lot of accumulation going on. So I'm not saying to bail out of this. It actually looks primed and ready to pop and run. And this is what happens generally just before short-term market high or even a major market top, as we see the markets in small caps and in growth stocks have a very strong pop. And it could last for several days. Percentage-wise, could be pretty big, but then it'll eventually get hammered and crushed and sold off very quickly. And we've kind of seen that. You can see that here. You see this huge pop. People get very, very excited. Even these ones over here, you see a very big run and pop. 10% move. Over here, it really had a big pop right there, 12% move, but it does reverse and sell off. 12% back down. This one was a dramatic 43% sell off in like a month and a half, 2 months. So you just got to be aware that a blow off phase, a big push here could signal, a big wave of selling as well. So we've been seeing money slosh really around a bunch of sectors. So 2 days ago, we saw the top sectors up here. They were pretty much red and relatively flat. And all of these ones on the lower chart that were underperforming on our hot list performed really well. And it's kind of going back and forth. People are moving into the growth stocks, and then suddenly they go for the undervalued ones. And I think that has to do with new quarter and rebalancing of lots of big portfolios. And I think this whole week is going to be kind of rebalancing. Tomorrow, the markets, obviously we got July 4th. So the markets could be closed, depending on which market you're in, but we're going to see definitely the markets probably have some lighter volume today. Usually favors higher pricing going into a long weekend. And so that's kind of where we're at for the markets. Other than that, that's about it for the day. We'll just see how things unfold. If we take a look at gold and silver real quick, not sure if I covered those yet. Gold still flagging sideways. Oh yeah, this actually brings up, I want to look at platinum and palladium. So gold is holding its value along with silver and miners. But what's interesting is if we take a look at platinum, platinum's showing some pretty big volatility. I talked about this, I think, in our mentoring session last week. I might have actually covered it, but we're getting these 3 surges to a high. In fact, we actually have 4 surges to a high. And these are when market rallies up and then it gets slammed really hard. Pushes to a nominal high, gets slammed really hard. Usually when you have 3 of these, it leads to a very strong breakdown. Now, we have 4 of these. So it is definitely channeling to the upside. There is lots of volatility. Not saying to bet against it. The trend is up. But when it does break down at some point, it'll probably form some type of bear flag and then eventually fall even further to the downside. But this is called a running correction, which means instead of a bull flag where it rallies up and then flags down and then has the second half of the move, a running correction is when the price runs up and it shakes people up. It's running, but correcting as it's running higher. It's a very volatile strategy. It can lead to huge blow-off moves to the upside that are followed by huge crashes afterwards. Or it could just go into a crash mode at any point. That's why these are super dangerous. It just means there's lots of volatility, which means there's lots of potential to make money, lots of potential to lose money. So just be aware when you see something like this, it is scary if you've got a lot of money involved in it, because you're running through a landmine. You don't know if it's going to pop or drop, and it's going to be significant when it does. Let's take a look.